Do you want to know what happened in the market through the end of April? I'll give you all the details next on Tom's Take. You're definitely going to want to watch this one. You've heard me say this before. The number one question out there that consumers have is, how's the market? What's happening in the market? What's going on in the real estate world? So I want to give you the most recent statistics through the month of April in the greater Philadelphia area, and then I'll explain what you should be thinking about if you're looking to make a purchase or a sales decision in the next 3, 6, 12 months. So the sample size here is the city of Philadelphia, Chester County, Delaware County, Montgomery County. So the number of sales so far this year through the end of April, they are up 13.9 to 18.4% in the surrounding counties, and they're up 31% in the city of Philadelphia. Remember, this time last year, we were still in aggressively locked down conditions for the real estate market. So you have to have some perspective about what you're looking at, and that's why you're seeing such a big jump in number of homes for sale. The average price in the city of Philadelphia is up year over year, same sample size, January to the end of April, 9.7%. And in the surrounding suburban counties, the average sale price is up 14.2 to 16.9%. So major appreciation. These numbers are really incredible when you look at the statistics, especially looking back over history. Inventory levels. This is something everybody's talking about right now. In the city of Philadelphia, they are up to a 2.5% supply of homes on the market in the month of April, at the end of April, and in the suburban counties, Chester, Delaware, Montgomery, a 1.6 to a 1.7 month supply. Again, this is the second month in a row we've seen the number of new listings in all 4 counties outpace the number of pending sales. So a little relief for some of the buyers that are out there. And lastly, rates are coming in between 3 to 3.25% on a 30-year fixed loan, and that's been in line with what we saw through the end of March. So what does this all mean? And I want to break this down for sellers and for buyers. So if you're thinking about selling, we are seeing pricing continue to appreciate at more than 1% a month now. So the question is, what kind of terms do you want? Because as inventory starts to creep up a little bit, you're going to see less buyers waiving contingencies, less buyers being willing to eat the difference in the appraised value versus the sale price of the property. So there's a couple things here that you may want to think about. As much as the market's been appreciating, it's going to cost buyers more money to buy your home later in the year because rates are projected to go up on mortgages. And as inventory increases, as rates go up, people may not be willing to start waiving contingencies. So if you're thinking about selling and you have your next home lined up, I'd recommend talking to someone about what the real value of your home is, because a lot of people don't know or they aren't aware. And if you have the opportunity to cash out now, I'm clear this is a great time to do it because there's a lot of folks that want to get settled over the summer so they can get their kids into school, and we're kind of back to this normal seasonal flow that we didn't see last year in 2020. So talk to someone if you're thinking about selling. A lot of opportunity with what's happening with pricing, and especially as inventory increases, that gives you a little less leverage in these incredible terms that we're seeing in contracts. If you're thinking about making a purchase, the big objection we hear, or the big talking point buyers have, is we're going to wait for the market to calm down. And what I know is this: if you want to wait, you may have to wait until 2026, because even though inventory is creeping up a little bit, we know that when there's a 6-month supply, buyers and sellers, they have equal leverage. Right now, we're at a 1.6, 1.7 month supply in the suburban counties and a 2.5 month supply in Philadelphia. So you've got a ways to go. More importantly, as rates go up, this home's going to cost you more, and prices are projected to continue to rise as well. So not only will you be paying a higher price, your payment's going to be higher too. So if you see a home and it fits 70, 75% of what you want, that's the kind of property to pursue. Because the people that wait, and the people that have waited so far, the market's moving away from them. We're seeing unprecedented appreciation. A normal market values appreciate at about 3% a year. So again, this is very situational. For buyers that want to wait for the market to calm down, don't wait, because you're going to be waiting a couple years. This isn't like a 2 or 3 month cycle. And when rates go up, it is going to cost you a lot more money. So we're seeing some incredible appreciation. We're seeing inventory come up a little bit. New listings are outpacing pending sales. So we're seeing some changes in the market. And as we work through the month of May and the month of June here, we're going to have a real clear picture where the next 6 months are going to go. So if you got questions about your individual situation, get in touch with a local agent. Make sure you're getting the right data about where you want to live, where you're looking to sell, because we know that real estate is very local in some places, and it's critical. It's critical to get the right information. You need anything, we're here to help. Otherwise, we'll catch you next week. You're definitely going to want to watch this one.